And these products, what's the differentiator on them? I think is that the sort of projected yields are very, very high. I think the lowest one we have in the REX range is sort of 20, 22, 23% annualized, all the way up to mid 30s. And in the YieldMax range, you're getting up to 59% with the MSTY products.
Hello, you're watching Proactive. I'm joined by HANetf co-CEO Hector McNeil. Hector, very good to speak with you as always. You have a whole batch of new ETFs that have been launched this year, and really looking at covered calls. So you've got the REX set of ETFs and also YieldMax ETFs. Let's start with the REX ETFs because there's three of those. Tell us briefly what they're covering.
Yeah, hi Stephen. Good to speak again. Yeah, no, very, very exciting times actually. I think we've said before what happens in the US tends to come here over time, and one of the big growth areas has been what I call high conviction ETFs, and they sort of split in between the sort of short and leveraged and the sort of crypto world, and then covered call products. And covered call products are basically sort of high income yielding products that use sort of three sources of income generally. The common or garden sort of dividend type returns, as well as income from covered calls. So essentially, the fund manager will write covered calls against certain asset classes and stocks, and in return they'll get an income that will be outsized and pay that out to investors. There's a whole sort of raft of retail investors in the US, and you're starting to see them here now. Some great names like Cashflow King or YieldMax or whatever the story is, and even people like Darth Vader or whatever on this Reddit communities and Discord communities and Twitter. And basically, they're looking to basically earn income, outside of their employment, and it's a big, big wave of people now. And these products, what's the differentiator on them? I think is that the sort of projected yields are very, very high. I think the lowest one we have in the REX range is sort of 20, 22, 23% annualized, all the way up to mid 30s. And in the YieldMax range, you're getting up to 59% with the MSTY products. So, on the REX, we have sort of crypto, blockchain and miners, equity income and growth. We have tech innovation and growth, and tech premium income and growth. And the difference between the tech innovation and tech premium is, I think the tech innovation is 50% written covered calls, and the premium income is higher than that. So essentially, investors can buy these products and take the yield. And what's nice about them as well is they pay on a monthly basis, Stephen, as well. So people can almost have it like another source of income from that levels. I mean, I would, from an investor perspective, I think it's hard to sort of justify buying pure garden dividend products, when you can get such high yields. I mean, some of these firms, I mean, if you take YieldMax, for example, they've only been in existence for a couple of years in the US, and they're nearly just a smidgen under 20 billion of assets now. I mean, their version of MSTY, the MicroStrategy covered call product, is I think in excess of $6 billion of assets now. So this stuff's been a massive success in Europe, and we're getting pretty much towards 100 million across the YieldMax and REX range, and we're planning a lot more launches as well to go alongside this. So it's very, very exciting times from that perspective.
So you mentioned the three REX ETF products. Hector, tell us about the two YieldMax ones.
Yeah, so the YieldMax, we've got again another one in the tech income space. I mean, they do cover different tech baskets, but essentially from the same sector. And then which is YMAG, and then we have the MSTR option income product MSTY. So that's basically the only one where it's written on a single company, and that's the MicroStrategy. And obviously, MicroStrategy is a Bitcoin treasury company. Michael Saylor, being super well known out there, and this is a covered call on that stock, and obviously that stock's quite volatile. So it usually tends to be the more volatile the stock, the more options income they can generate. And what they do is these guys are active managers, both of them, both YieldMax and REX, so super knowledgeable. And they trade daily options. And daily options are a relatively new thing in the US market. And I think these guys are, are so popular now that they're an X% of the total daily options market as a market share. So they've become absolutely enormous when it comes to this marketplace. So it's giving basically investors a great way to get new forms of yield that doesn't involve just getting dividend high paying dividend companies. It is a new way of doing it, and they're also uncorrelated asset classes. So yeah, investors tend to try and see, that the NAV deterioration, so the fund isn't giving out over and above its NAV, so it does take, very smart active managers to get that right and provide those returns. But I think anybody who says that you can get a 20% return from an income perspective, is very exciting from a new product perspective. And what's really interesting, Stephen, is that I think this is the start of the structured product market, getting sucked into what I call the ETF black hole. Initially you had the passives, then you had the smart beta, then you had the thematics, and now you're getting the active and structured outcome. So that structured outcome world that's, pretty much been the domain of the big banks in the structured product market, I think is starting to find its way into ETFs on exchange, so that ETF black hole is capturing that world now, which is really exciting.
Definitely one for our viewers to take a look at. Hector, thank you as always for speaking with us.
Thank you very much, Stephen. Always a pleasure.
Hector McNeil, the co-CEO of HANetf.